The stocks discussed on Phil's Gang are not in any way a recommendation or solicitation to buy, sell, or hold. If considering acting on information presented, we first recommend you seek out a competent, licensed professional for advice. Get ready for the radio show that tells you what Wall Street doesn't want you to know.
Oh, I'm a money magnet. Money's coming to me. Money sets me free. I'm a money magnet. Money's coming to me.
It's your daily dose of how to manage your money. And now it's time for Phil's Gang on the Off the Wall Street Radio Network. With your host, Phil Grande.
And good afternoon. My name is Phil Grande, CEO of philsgang.com. And the market just continues to rally. People say, well, it won't stop. Well, it will at one point, because what's going on right now is just a big party. Doesn't make sense. First of all, let's talk about bond yields. If you look at the bond yields and take a look at TLT, you can see the bond market, TLT, has been dropping, but yields have been rising. Now, if you look at the 10-year Treasury yield, which is connected to our mortgages, credit cards, and about everything else, those yields are rising. And so, and that, you know, again, when you have, it's bad for the stock market, bad for the economy. The value of your bond may increase, but the dollar weakens, and that's a real problem, because that means all the stuff we're importing for Walmart, Home Depot, Lowe's, all those stores where 90% of the population shop, everything gets more expensive. So what's going on? Why does the market keep going up? So, and especially when you got yields going up on your 10-year, your 20-year, it just makes no sense. Well, if you really think about what's going on, and if you take the market, and let's take a look at SPY, for example. I'll put it up right here. Now, since, if you go back to the low of April 4th, and then you can see where we had the spider started turning green, our buy signal, this thing has gone straight up. And it's because the retail investor is pushing the market up. The retail investor is controlling the market. We call them tourists, because they're like tourists. They just wander around, don't know what they're doing. And it's the same thing in the stock market. Most tourists are people who never want to learn, never take classes. They just think they can find a hot stock by listening to TV, and they're going to make money. That's not how it works. So the retail investor always makes the same mistake. Right before the rally peaks, that's when they get in. They're always late. They always get in just as the market's peaking. And they've been, if you go and take a look at this low here in April 4th, and you see where it turned green here on April 24th, they couldn't stand it anymore. So they just, I got to get in this market. So they've been putting $50 billion a month. Now, that's not hedge funds. That's not insurance companies. Okay, this is retail investors. So normally you want hedge funds putting that money in. You want big banks. You want insurance companies putting that kind of money in. Then you have confidence in the market. But when you have a bunch of retail investors that don't know what they're doing, and they're buying stock truly out of emotion, just emotion, that they're angry at everybody, they missed the market. They missed this rally. So that becomes very dangerous. Now, interest rates keep going up, market keeps going up. Take a look at housing. Housing is a bust. If you take new home sales, May and June, put them together, they're down 6%. Why? Because if you look at the 30-year fixed rate mortgage, if we go back to January 21, let me see if I can get the 10-year Treasury up here. 10-year yield, yeah. You go back to 2021, they were 2.77%. January 2020, 3.5%. And then January 2023, that's when they started to move up, 6.3. Now, what happened between the January 2020 and where we were at 3.56, or 2022, sorry, and January 2023? How did we double in 12 months? Well, that was because we had this terrible inflation. So they had to drive rates up. Remember, inflation was at 9%. So there's about, if you take the amount of people who finance their home under 4%, it's about 60% of households. 60% of households. So they lucked out. So they're not going to get rid of their mortgage anytime soon. They're not going to sell their home and turn around and get a mortgage for near 7% today. So that is causing a big problem with the economy, because remember, what drives the economy is homes, home sales, and home building. And look at the home builders. The home builders are tanking. In fact, they're cutting their prices the fastest they've ever seen in their whole history. They're trying to get rid of their inventory. They're trying to cut. They're laying people off. So, because of these terrible interest rates. Now, remember, these are the 10-year Treasury yield. So the Fed doesn't control that, okay? The Fed controls the short-term yield. But when the Fed moves the short-term yield, usually the 10-year Treasury yield will follow. So if they're going to drop the Fed rate, then usually the 10-year Treasury yield will fall. But this is a real problem for the market, because when you have yields that are going up, and it's not only bad for the stock market, it's bad for the economy, but the stock market has been just fine. We're hitting new highs almost every day. How could that be? Because it's all in one sector. It's always in the tech sector, either AI. Now people are getting hurt too in the tech sector. They don't know what they're doing. The tourists, they're out there buying chips that go into automobiles. Are they out of their mind? You start buying those companies that have chips. Let me see if I can find one for you here. You take, let's see, maybe I can find one quick here. Yeah, take, for example, TXN. That tanked. Look at MCHP. That's tanking. ADI. That's tanked because of the automobiles. Automobile business is terrible because, again, the 10-year Treasury yield keeps going up. The yields are going up. Now, remember, yields were coming down for quite some time, but now they're turning around and going back up. And Trump's mad because he wants the Fed to drop the short-term rate so he can start working on getting that 10-year rate down. But they can't do it. The Fed can't cut rates. You can't cut rates when you have when the market starts dropping like this. When you have yields that are increasing, you just can't jump in and say let's go to zero rates. It just doesn't work that way. And when yields are going up or interest rates are going up, it's to fight the inflation. And inflation right now is starting to go right back up again. Remember they said inflation was 2%? Nowhere near that now. Now we're at 3%. So when bond yields start rising, as you know, as a bondholder, the value of your bond declines, and yields increase. So that's bad. That's bad for the stock market and the economy. So the economy is already feeling it. We know that. The consumer's in trouble in spite of what they're telling us every day, how strong the consumer is. I mean, the bankruptcies are almost back to where they were in 2008, 2009. But again, when you look at the stocks, The problem is that same group of tourists are buying the same stocks, okay? You know what they are. NVIDIA, the Magnificent Seven, they're all in that same group. So if you look at the Qs, they've been strong. If you look at the Magnificent Seven, they've been strong. Look at ARC, been strong. NVIDIA, AMD, all these stocks are strong. As I said, the only ones you got to be careful are the chips that are going into automobiles, like TXN, MCHP, and ADI. Now, the other group that's been doing well is any chips that have to do with, and we're in these, with energy. Any chips that have to do with, powering up the AI systems, if you will. So the point I'm trying to make is, even though you hear every day how the market is making new highs and people are excited, right? And they think the market is strong. Remember another way the market's going up. So we got one way, we got the $50 billion a month coming in for tourists who don't know what they're doing. And the other reason is because Trump is a very smart man. He knows how to market. When he first started to say that he was going to do tariffs in April, the market dropped 1,000 points because everybody was thinking tariffs were going to be 40%, 50%. He said 70%. People panicked, started to sell. But he's pretty clever. He's a good salesman. He knew he wasn't going to do that. And he knew if you, just like a negotiation, you start at a price, and then, but you really know what you're going to pay for it, right? Well, he knew he was only going to go 15%, 10, 15%. And why would he only go 10, 15%? Because he's smart. He's an entrepreneur. He's not a politician. He's not a president that's a politician, don't know anything. And he knew that, look, if I can keep these yields low, between 10, 15%, then I know for a fact that the country like China, they don't want to give up market share. Walmart doesn't want to give up market share. They will eat a 10% or 15%. They will eat it. And if Walmart doesn't eat it, China will eat it all. He knew that, and he was right. He was right. So when he starts, now there's 200 countries he's making deals with. So he made a deal with Japan, 15% on imports, not 25. He made a deal with EU, 15%, not 30. And the market went up 500 points. And who's buying? You got the tourists who are coming in and buying tech stocks, always tech stock. The last thing you want to be buying is housing stocks, that's for sure, okay, with mortgage rates going up. So as I said, he's very clever. He's going to release every couple of days another victory. Hey, I just did a deal with South Korea. Hey, I just did a deal with who knows, with Indonesia or with Africa. Or he's going to let them out one at a time because he knows he can rally the market every time because it's a relief rally. People say, oh, thank God, I thought he was going to do 50%, I thought he was going to do 30%. He's only going to do 10%, 50%. Yeah. Oh, my God, buy. These are the people, the tourists who don't know what they're doing. So now another thing is not only that $50 billion a month, not only is Trump using this tariff announcement dribbling out that moves the market up every time, but we also have $850 billion in stock buybacks. What, are you nuts? $850 billion. Now, $850 billion, half of that was already used for the first half of the year. That's what's driving the market, not earnings. Earnings aren't driving anything, okay? The earnings stink. And here's the thing about earnings. They lie about earnings. Listen to this. This is true.
If earnings estimates have come down so much for the year, how come?
Well, first let me say, you notice 88%, almost 90% of everybody who reported said, we beat our estimates. We beat our earnings estimate. 90% almost, right? Listen.
If earnings estimates have come down so much for the year, how come the market's almost at an all-time high? The stock market is telling you it doesn't believe what Wall Street is projecting.
Of course not. Wall Street's lying. So and you can see that when they come out with these earnings and they're always beating they're beating their estimates. They drop them so low. They need a backhoe, like the builders need their backhoe to go find them. This whole thing is just phony. But it can go on for months and months and months. So that's why, please, learn how to follow the Fed, understand the messages they're sending, and learn how to sell shorts. So when this day's gone and we tank, you know how to make money on the way down. And we'll show you how to do that. We've been doing that for over 25 years for people just like you. See you on the charts. Be right back.
Want more information on this show? Go to philsgang.com or give them a call at 877-600-GANG.
At St. Jude Children's Research Hospital, we're fighting against childhood cancer every day. At the heart of this battle are our donors.
Most of us want to make some type of difference in the lives of others. St. Jude does miraculous work.
The fact that no one has to pay, it's a place where everyone is treated as an equal.
Everybody is welcome here, and it doesn't matter your religion or what part of the world you're from, all that is taken away. It just gives you some hope.
It's just a nice feeling to put your energy into something that really does genuinely make a difference in a child's life.
There's just no greater gift. If we have the ability to help, then we have a responsibility to help.
Finding cures, saving children. St. Jude Children's Research Hospital. Find out how you can help at stjude.org.
You want to invest your money and grow your wealth. How do you invest intelligently? Become a Phil's Gang member and receive the training, advice, and software that will take your investing to the next level. Our team is comprised of successful investors, all with proven track records. Phil's Gang software is easy to use, painless to navigate, and tells you exactly when to buy and sell to help maximize profits. Learn about common market mistakes and how to minimize them. Phil's Gang has successfully taught tens of thousands of investors how to navigate the market with confidence. You don't need to be a seasoned investor to benefit from the Phil's Gang platform, no matter what level of investor you are. Phil's Gang strategies for investing are designed to put you on the path to success. Sign up for a 10-day free trial to see our platform in action, avoid market pitfalls, and start winning with Phil's Gang. Learn more at philsgang.com. That's philsgang.com. Welcome back. Learn, invest, and make profits with Phil Grande. Simply go to philsgang.com. Now, here's Phil.
Now, we're going to talk a little bit about Tesla, but before I do, I want to finish up on these yields. When you're investing in a market, you live and die by the bond market, by the yields. Again, when you got yields, treasury yields, okay, are rising, that means borrowing costs are going up, credit cards, mortgages, everything. That's really bad, especially for the consumer who's tapped out. And tell us how strong the consumer is, which is a bold-faced lie. Are you kidding me? I'm not going to take up the time to go through all the things that the consumer, how they're upside down. I do it enough, but I'm just saying that the consumer is really hurting. Bankruptcies are up big time. They're just tapped. And that's the problem with keeping rates too low for too long, because people end up buying what they don't need and what they can't afford. Then they have this big debt. They get in trouble. It's terrible. But the 10-year Treasury yield is one of the most important Treasury yields. And when you see, and when you have the yields that are rising, not only does it tell you that interest rates are going to go up, it's telling you inflation's going to go up. It's telling you that deficits are going up. So Trump having this big tax cut, beautiful tax cut, was wonderful. But guess what? Hate to tell you, but deficits are going to go up. So Trump is talking about firing Powell.
The White House says the president is considering firing Federal Reserve Chairman Jerome Powell. That's according to a senior White House official, saying the president asked lawmakers meeting in the Oval Office late yesterday how they felt about firing the Fed chair. The lawmakers that were in the room, 12 Republicans, expressed their approval for firing the Fed chair.
Oh, sure. Just nod their head up and down, head and down. How are you going to fire the man because he's not willing to cut rates? Now, I understand what Trump's saying.
Are you completely ruling out the idea of firing Jerome Powell?
I don't rule out anything, but I think it's highly unlikely.
Sure, it's highly unlikely because he knows Powell's right. You can't go cut rates, especially the 10-year Treasury yield rate. You can't. You'd really screw up the economy. He knows this. It's all political. You know, because we all know everybody wants a house. People can't buy homes with mortgage rates of 7%. I don't know why. When I was a kid, my first home, I was paying 14%. That's true, 14% when I was a kid. Nobody remembers. You know, when I hear how rates at 6 or 7% is high, I laugh. I remember, boy, I tell you, many times when you bought a house, you're paying 12%, 13%, 14%, which is normal. So Trump knows he can't cut rates. So he's not going to fire him, okay? He's not going to fire him. Because if he fires him, he's going to back himself into the corner because he's going to have to cut rates. Because that's what he's saying. I'm going to fire him and cut rates. He knows. He doesn't want to be backed in that corner. He doesn't want to be backed in that corner. So I don't think you'll see that. As I said, we're heading towards the peak. It takes usually about 8, 9 months, 10 months to get to the peak. Once you're getting near there, it takes about 8 to 10 months to get there. It takes time, because it's like turning to Queen Mary with a canoe. But we'll get there, and you got to be prepared for that. Okay, you better learn how to sell short. But in the meantime, we can make a lot of money going long like we're doing with stocks, as long as you're in the right stocks. Like I said, you don't want to be in chip stocks that they sell to the automobile industry. You lose your butt. You want to be in stocks like we are, AI stocks, power stocks. Those are up, 68%, for God's sakes. So let's talk about Tesla. People keep asking me about Tesla. Should I stay in? Should I stay in? And I've told people, look, if you bought it early on, I would hold on to it. Just put some stops in. But you had to buy it at the right time, okay? And by the way, if you can, let's see if I can get it up here. All right, I'll try to get up here for you. Yeah, let's do this. I think I can get it right here if I'm right or not. Let's see. There you go. I got it. Okay, so Tesla. So let's take Tesla, put it up on the chart. And here's what I told my members who've been with me for a long time. I said, look, if you bought this thing early on, okay, you got in real early, all right? And what I'm talking about, you got in right in this area here, just as it turned green right there, and you caught this uptrend right here. So just if I draw a line back, okay, if I draw a line back, let's say year to date, let's go 1 year. So if I draw a support line, it would be right here like this, okay? Right across, right in here. Up too high, it'd be right around here like this. So as long as it doesn't take out this low right here, okay, that low, which is about a low of around 327. If you don't take that, this got a chance of recovering, going out and taking out this high right in this area here, which is about 343. But if it drops and takes out that low of June 30, you better be shorting because it's over. Now, talk about Tesla. The revenue dropped 12% and profit 16%. He's another guy I wouldn't bet against. Okay, I wouldn't bet against this guy Musk, just like I wouldn't bet against the president. Now, Tesla is losing a big share of their market. And who is their market? Well, their market, remember, are young, environmentally conscious, tech-savvy, liberal crowd. That's who they are. They're a big liberal crowd. And now, if you go back, now remember, they're upset. Their hero was Musk, and owning a Tesla. You were part of the clan, and it was cool, man. You owned a Tesla. You were cool. You had the ultimate status symbol as a woke, liberal person. Okay, and in fact, Tesla's the prerequisite was that the Teslas sit in the Silicon Valley parking lots, okay? I mean, if you went to any of the parking lots near Silicon Valley, all you see is Tesla, okay? I mean, you got to have a Tesla. But now that's all gone because they're mad at their hero. He put on that mega hat, and that was the end of it. So, but again, they turned on their hero faster than a speeding bullet, Musk, and they just as fast as Brennan and Clapper are going to turn on Obama. So they're going to their grandfather's car, okay? They said, let's go back to my grandfather's car. Remember, if you go back to the 60s and the 70s, it was the BMW, okay, and Volvo. I remember, okay, in the 60s, people driving Volvos, and you always know there's plenty of them. They're green, they're always dirty, splattered with mud and dirt. The women driving it would have hair under their armpits, okay, while they're eating a granola bar. Never cleaned their car. They never took a shower themselves. It was cool. Men would emulate the Beatles, right? Lennon. They let their hair grow, put it in a ponytail, and put their John Lennon glasses on with flippers. Well, they're going back to their grandparents' coolness, okay? They're going back to the BMW. They're going back to the Volvo. I don't even know if they even make Volvos anymore. But, and it was funny because and Tesla lost a big share of their market. But you can find markets. You can find markets, okay? As long as you create a great product that people want, there's plenty of markets out there. So these punks, okay, these kids who are, most of them are, communists, okay, or want to be communists, they are, let them go. He could outlast them. He's got plenty of money. He can raise all kinds of, he could raise enough money right now that would sustain that company for 5 years. For 5 years. And you want to bet against him that he can't find other markets than these punks? Come on, give me a break. Okay, of course he can. So it's, again, I think, again, this tariff thing is going to keep this market going up. Trump's a genius at that, letting them, releasing them one at a time every other 2 days or 4 days or whatever. The market always gets a big, remember we had the 500 point rally yesterday or the day before when they announced the deal with UK, Philippines, and Japan. So this is what he's going to do. Now, the problem that Trump is going to run into right now, okay, is inflation. And because inflation is going to start soaring, because we are going to have big deficits, and you have to pay the deficits. You have to print money to pay the deficits, okay? And if you're going to go and borrow money from Japan or France or China, they want big bucks for interest. And what happens is, where Trump could get in trouble, is that it ends up where when they start borrowing money, it's called crowding out. They say to everybody, go to your bank, take your money out of the bank and lend to the United States government. We'll give you twice as much as you're getting at the bank. And then that's what happens. So everybody goes, takes their money out of the banks, savings, checking accounts, because they get big interest rate with the treasuries of the government. And now the problem becomes for Trump, he's just screwed every small, mid-sized cap business and just small individual private businesses, because the small businesses that are private, they got to go to banks to get money. And remember, it's the small business, okay, that's not public. That drives our country. They create all the jobs. They could create all the best jobs, all the high-paying jobs. So now they don't have access to money. Now, I have friends here in Sarasota who have small business. They can't get money at the bank to finance inventory anymore. They won't give them, and all the lines of credit that they had for inventory, you could have a $100,000 line of inventory. I know a guy's got a little Hallmark card thing, and he can't buy inventory for Christmas. He can't get his line of credit shut off. American Express, they have a program for small business. Are you kidding me? If you had a $100,000 line of credit, they cut that line of credit down to $20,000. That's what they're doing, American Express, and all these. So again, the big problem for Trump is that he can't cut rates while we got deficits, and he's creating the deficits. Now, his plan's going to work. In the end, his tariff plan is going to work. But we got to go through some pain. And we're going to go through, I think very shortly, about a 5% pullback in the market, maybe 6%. It's due. And then we're going to have one big rally off of that, because everybody's going to think that's it. It's always a head fake rally. It's always a head fake rally, okay? Everybody starts buying. And then what happens, all the brokerage houses like JP Morgan and Citigroup, who represent the big institutions like the police and the fire and the nurses and all those big unions, and what they do is they start selling into these rallies, right? So we're going to get a 5%, and then the market's going to start rallying up big time. Everybody's going to jump in the market. Everybody's going to cover their short positions. We're going to have one hell of a rally. And then that's when we hit the peak. That's when the blow-off comes. Always does. Always does. And then that's when you finally get your bubble pops, and that's when you get your crash. Remember, every stock market crash is nothing but a bubble being popped. These bubbles are created. And who are they created by? The people who control 95% of the stocks, the top 1%. And the 101% who control, I think it's 78%, they're in that top 1%, but I think they control about 78% of it. They create bubbles. That's what they do. That's how they make money. So protect yourself, okay? Learn how to sell short. One day you're going to need it. So just come to my gang, philsgang.com, free for 10 days.
You have been listening to Phil's Gang with your host, Phil Grande, on the Off the Wall Street Radio Network. Off the Wall Street Radio Network. Remember to visit Phil's website at philsgang.com. That's philsgang.com. Or call the office, 877-600-4264. That's 877-600-4264.
It's